Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centred around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. I am thrilled to be here today, as ever, with the wonderful Tom and Francis, ready to talk about fintech with you. But how are you guys doing this week? Tom, how's everything been going?
Yeah, it's all been going very well. It's good to be back once again this week. It's good to have the trio all together. I think it's been a bit rarer recently, so it's nice to have everyone all back in the same podcast. And yeah, it's been a good week for news. We've been pretty busy. We've got a lot coming up in the next week as well that we're excited to work on. And it's an exciting time. Things are gearing back up after the summer. And I feel like the feel-good factor in fintech is back.
Amazing stuff. I love that optimism there. It's really quite refreshing for that positivity. But Francis, how are you doing? How's your week going?
Very much the same as Tom's, but yeah, doing very, very well. It's been, as Tom said, very busy, and we're sort of looking forward to what we've got planned next week. I'm not going to say what it is just yet. Keep the suspense, keep the surprise, but yeah, it should be an interesting podcast next week, that's for sure.
That's very, very exciting times. Anyway, guys, what are we going to be talking about this week? What's happening in the fintech world? Francis, what's your article?
So this week, I'm going to be talking about subscriptions and how organizations should prioritize keeping customers rather than chasing new ones.
Great stuff. And Tom, how about you? What are you going to be talking about?
This week, I'll be talking about a new forecast which predicts that Klarna will have halved its workforce to 2,000 people by the end of next year.
Great stuff. And today, I'm going to be talking about a new Zambian fintech, Union 54, that's announced the launch of its messaging app with an integrated payment wallet. So very exciting topics today. Tom, I'm going to let you go first this week, so why don't you take it away?
Yeah, no problem. So there was some new analysis by a firm called FXC Intelligence, which piqued my interest this week because it revealed that Klarna has continued to reduce its workforce through the use of AI. And the analysis basically found that if it continues to do so at the same rate that it has done for the last 2 years, it will have halved the size of its workforce to 2,000 by the end of 2025. So to give some context, in 2021, Klarna was valued at around $45.6 billion, which eventually crashed down to only $6.7 billion in 2022, representing an 85% reduction from the previous year. And that just came due to a broader economic tech slowdown. So in an effort to regain as much of its previous value as possible, Klarna has been embracing prolific use of AI, which so far has arguably been very successful, enabling it to break even after several years of losses. And that's been really important ahead of its long anticipated US IPO, which could come as soon as next year. So the head of content at FXC Intelligence, Lucy Ingham, said that its wholehearted embrace of AI does have its drawbacks, however, and the largest of these was a decrease in employee satisfaction. So further analysis showed that the company's average rating on Glassdoor declined from 3.8 in 2022 to a current score of just 3. And she also explained that Klarna has basically made itself highly reliant on OpenAI to supply the tools that are now integral to many of its operations, which she says could eventually pose a problem if anything were to happen to the AI player in the future. And the real reason that I'm bringing this to the table is because the story reminded me of some past tweets from the co-founder and CEO of Klarna, who has basically explained in the past that he's using AI to reduce costs for, say, marketing purposes or to reduce, the cost of image creation for his apps. And he's explaining that by almost fully stopping recruitment, his workforce is just naturally shrinking by around 20% per year through people naturally leaving, finding new roles, or deciding to move abroad, whatever the reason may be. And it really just kind of piqued my interest because I know there's been a bit of controversy over some of his tweets in the past, people saying that he's had kind of tone-deaf tweets where he's kind of celebrating the reduction of the size of his workforce through AI, and people saying, well, this is a bit worrying, you're just getting rid of all your employees and replacing it with AI processes. So I kind of wanting to get your guys' stance on this rapid increase in the use of AI. Obviously, it is inevitably cutting certain jobs, But equally, I guess you could argue it's keeping some firms, including Klarna, afloat and enabling them to survive in what has been a really difficult time period for any firms in the world of finance. So, Polly, I'll come to you first. Where do you lie on this kind of spectrum between using AI but also keeping the workforce as big as it is? Where do you lie on this argument?
So I think it's a really interesting topic, and one that I think almost goes beyond fintech and like this industry. I think, the conversation about, how much should we be using AI versus human their human counterparts, so human workforces, is a conversation that I think we're going to be having in all aspects of life for quite a while. But I think it's really interesting to see it framed, obviously, with Klarna and their sort of very aggressive use of AI. I think it's a really difficult debate, I think, and it's quite easy to kind of say a lot of stuff without necessarily understanding, I think, when it comes to AI. At least that's my experience of it. Like, it's quite hard to wrap your head around it. But I think it's quite disheartening to see that it is, there is realistically, they're kind of going to be cutting the workforce in half. Like, that's half of its workforce now out of work, now out of jobs, or will be, I guess, by the end of 2025 if they keep on track with its target. And obviously that's not great, and like a hiring freeze and removing literally over 1,000 jobs, that is a lot. And obviously there's balance between innovation and moving forward, and obviously moving forward for Klarna is using AI more, but then if you're doing it at the expense of people, especially in this sort of economy that we have nowadays, where losing your job is a really difficult thing to go through, because obviously it's a bit of a difficult situation economically at the moment. But then on the other hand of that, obviously you have this exciting idea of innovation and technology and advancement and moving into the next generation of whatever finance or fintech or any industry, whatever you want to pick, could be. So it's that really strange balance, and I think it's that balance that hasn't quite been hit yet, because I think AI is still very exciting. It's not new by any means, but it is new in terms of, I guess, people's perceptions of it. I think it's only really in the last year or so that the general public has kind of become aware of AI and the capabilities of AI, and it's really become a buzzword for a lot of things. And I think that is going to be a really interesting thing to manage. But I do think there is an element already of almost like AI fatigue, which is a term I have literally just made up that second. But I think people are already getting a little bit done with AI, and I don't know if that's a very fair comment to make, because obviously I don't think AI is not going anywhere, and AI is an incredible tool for a lot of things, and when you use that tool in the ways that it is supposed to be used, it's really revolutionary, as I guess Klarna are seeing because of their use of it at the moment. But I do think there is an element, at least when I'm talking to people in the discussion that I'm kind of like seeing online and in person as well, I think people are kind of already a bit done with AI, and I think it is going to get to a point where having a human element is going to become almost like a real differential in a business. Like at the moment, everyone's talking about, like, you will say, if your business uses AI, you'll probably use that somewhere and be like, oh yeah, we're so cutting edge, we use AI. But actually, I think sooner rather than later, it's going to become the opposite. And actually, the differentiator is going to be the fact that you have humans working for you, or that you have the human touch. So it's a really tricky one. And it's kind of, like I say, it's a wider debate that I don't think we can really scratch the surface of in this podcast when we just talk about fintech. Like, it's literally a whole world, whole industry, whole society kind of debate. But it's really interesting. And I think it is, thinking very specifically about this news, I think it is really disappointing with Klarna. And I think, they are seeing necessarily the consequence of that, obviously, with their rating on Glassdoor and, employee satisfaction going down and things like that. So hopefully they will find the balance between embracing their innovation and keeping their employees happy and keeping their employees working to the best of their ability, because at the end of the day, we do know things can go wrong. with technology. You know, we had the big global outage literally weeks ago, and before that we had, you know, the big contactless outlet outage in the UK with like major supermarkets and that. So we know and we have examples of technology going wrong. And if we rely too much on AI, is that going to be an issue further down the line when someone else does, you know, a dodgy upload or a dodgy fix that's not going to bring everything to a standstill? I don't know. But it's a really interesting debate. I don't really know how to sum up what I've said other than it's a really interesting debate that is going to be talked about for a very long time. But I do think we're going to start seeing the tide turn back toward the human element, I think. That's my I'll end it there, otherwise I'll just keep talking for ages.
No, I think you've made some great points there, especially that kind of return to the human element. You know, I think already personally I've seen quite a lot of like marketing campaigns or just like imagery on certain tweets or things that companies are putting out, and you immediately know already like, oh, that's clearly they've used AI to generate that, and then someone's just touched it up so the text on the image makes sense or something like that. But it's already getting a little bit bland in some cases where people are just throwing it into AI, putting it out, and you're right. If it's not the peak that company saying, "Oh, we've got humans on board still that are doing our work," but it might just be the final product, at least for the time being, is going to be clearly you've got a design team and a marketing team that are working on this rather than just putting everything through AI. I already think that's kind of evident in certain companies. And it kind of reminded me of, I forget where I saw it, someone speaking on social media, basically saying how it, like in the 1980s, you know, people would have been complaining about, you know, I think it was Lotus 123, which is a popular spreadsheet program at the time. And when that was introduced, it kind of reduced the need for CEOs hiring paper pushers and things like that, which meant that they could like reduce their accounting staff by like huge amounts. And at the time, people would have gone, well, where are these, you know, what are we going to do now? This technology is taking over jobs. And we're kind of having the same conversation now. And it did turn out that, you know, people just adapted. New jobs were created as a result of the technology. That kind of became a defunct job, but new roles appeared. And it wasn't like huge amounts of people were just offlaid and never found new roles that, you know, that came into existence. So I think it's an interesting kind of conversation. And I guess the question is this just another step of that where people will adapt and will new jobs come about to fill the gap? I guess no one knows for sure. And, you know, I want to get your take, Francis, on this. You know, what do you think? Is this something that is just to cut the next step of evolution in terms of the job market and tech, or, you know, is this a bad thing?
I don't think I'd say it's a bad thing, and I definitely do think it is the next sort of evolutionary step. I think what we will see is, while initially it might be sort of like a backstep in the amount of jobs, I feel like going through like the school system and sort of the next generation, they're going to be sort of brought up with AI and how to sort of really understand and utilize it properly. I feel like data engineers and stuff like that are probably going to become, you know, jobs that more people sort of go after, simply because that's where the jobs will be. People will need to understand how to fix AI, to stop any biases, like involuntary biases that are created and things like that. I think you both really sort of mentioned a really good point in that AI can be very samey in the sense that people will get sick of it, because it seems that every company is just using the same sort of thing. Like they're just making the same product with a different name. It gives that impression, at least. So I feel like when you actually see something that's a little bit different, you can actually appreciate the human work that has gone into it. But I think firms need to be smart, because I mean, Klarna is massive, but I think if they don't sort of address this employee satisfaction issue that they could be facing right now, because of course, as less people work there, the workload increases for the people that remain. And I think that, you know, if they don't address that, things will go south quickly for them. Not because of like the reputation that they'll get with customers. I mean, that is the thing. I mean, I've heard people say that, you know, I'm not going to use Amazon anymore because I don't like the way that they treat their employees. I mean, Amazon, I'm yet to meet someone who doesn't actually use Amazon. I mean, they say it, but I feel like they've probably still used it. But, you know, I think the issue will lie is that the talented employees and the good workers, they're just not going to stay at Klarna. They're going to go somewhere that treats them better. So I think that really does become a big thing. And, you know, whilst utilizing AI and technology is good, there still needs to always remain an understanding that humans are the ones that are going to be overseeing it and making sure it works well. So making sure that they're treated well and have, a good mental attitude to work. That is the role of the leaders in an organization. And I think that really needs to be a top priority.
No, absolutely. And I think you've both summed up the arguments that are there about AI and workforces really well. And once again, I think it's just a case of, we'll have to wait and see what happens over the next year in terms of how certainly big brands approach the use of AI and how that impacts the size of workforces and their headcount. But yeah, I think it's an interesting time to be looking out for, and hopefully it will be a kind of a case that we've seen before where new roles actually end up being introduced and invented really because of the use of AI, and hopefully it will end up being good news for just the whole sort of financial sector and job market as a whole. But with that in mind, why don't we move over to the next article? Which one do you wants to go next?
Yeah, so my article this week, as I mentioned, is all about subscriptions, and it comes from new research from Stripe, the financial infrastructure platform for businesses. And I feel like there's been a big misconception about the subscription economy since the pandemic, because I feel like a lot of people may have felt that it fell off a bit and that since then no one has really used it. But this new research from Stripe has found that it is still quite healthy, but firms need to take a new approach. A lot of the time I feel like when we see these adverts for subscription platforms, a lot of the time they're catered towards new customers, sort of saying, if you join, then you'll get the first 3 months free, or like for £1 or something like that. And I don't the research from Stripe seems to suggest that that isn't the right attitude to have. While that is a benefit, a good service and a good and a good offering, it isn't the be all end all that is going to ensure the subscription service remains healthy in the long term. So examining over 2,000 decision makers in subscription businesses across 9 countries, Stripe revealed that the majority plan to experiment with more flexible subscription plans in the future. And one way that was identified was by enabling usage-based billing. However, existing billing systems often lack the flexibility to support these creative pricing strategies. So the report found that involuntary churn remains a persistent issue for subscription firms, and that involuntary churn is essentially when a subscription ends involuntarily, for example, because of a failed payment, due to an expired credit card, or perhaps a lack of funds within a bank account. So despite 40% of businesses experiencing an uptick in involuntary churn over the past year, many lack comprehensive data to quantify revenue loss. And in fact, 43% of businesses cannot quantify the revenue impact from churn or payment failures. So a further 79% admit that they have not implemented any measures like retry policies or to mitigate involuntary churn. So with that in mind, I sort of wanted to discuss with you guys, what do you think needs to happen for involuntary churn to be cut down? Do the payments infrastructures that the organizations are using need to be completely overhauled? And how can they manage payments better? Because I know when I want to change the date, for example, on one of my subscriptions, and it doesn't let me, and the only option is to cancel. A lot of the time I'll cancel and then forget to sign up again, because it's you don't use that service in a while, and you're like, you know what, I don't need it anymore. I don't think organizations should ever tempt you with the cancel button if you want something to change, because that just makes you think, do I actually need this? So I wanted to get your guys' views. Do you think that, what do you guys think? How can involuntary churn be cut down? Tom, I'll go to you first.
Yeah, I think it's quite a difficult thing for these subscription firms to address, really, because it's the type of thing that in one sense is out of their control, because if people at the end of the day aren't updating their payment information, say they're using a card that becomes out of date, they try to charge that card, which is now no longer valid, the payment can't go through, and like you said, then that causes people to not re-sign up once they've realized, I haven't had that in a month or two, and I actually realize I don't need it. And I think that is quite a difficult thing, but obviously the obvious kind of solution, at least to me, would be just improving the technology and the insights that technology can offer both the firms and the customers. So in the sense of if customers are getting a regular reminder, like, you've got a payment card signed up with us that's actually going to expire in 3 months, 2 months, 1 month, it's going to encourage people to switch over, update their information, and as long as that process of updating information is pretty seamless, I think people aren't going to be worried about doing it. I think it's when there's friction involved, people go, oh, I just won't bother now. They forget to do it in the end, and then it ends up not doing it at all. So I think just updating the information and technology regarding payments is going to be hugely important. And obviously there are solutions out there to kind of try and combat that, as this article delves into. So yeah, I just think it's a case of updating the information and insights and giving a little push to consumers to say, hey, this is expiring, and make sure that the process to update it is really easy. And I think that's got to be surely the best way for firms to combat involuntary churn.
Yeah, I think that is a very interesting approach. I feel like whatever way you think about it, I think the firms do need to do more. I know that we always talk about, like, from an education standpoint, who's more to blame, the individual or the business. And in this instance, I do think the business has a bigger responsibility to sort of, well, not only for the welfare, it is also for the welfare of their consumers, to make them aware of, this is when the payment is being taken out. Do you want to change it to be more convenient for you? Do you want to, I think firms really need to tailor their subscription services to their consumers. And a lot of the time, subscription services are a one size fits all. And I don't really think that is the correct approach, at least going forward, especially in like an uber personalized world that we live in today, where if, you're not getting this service that you as a consumer want exactly to a T, you could probably find it somewhere else. So, Polly, what do you think?
Yeah, I completely agree with what you guys have said and what you just said, Francis, about how subscriptions are very one size fits all, and that just isn't applicable nowadays. I think, obviously subscriptions really had their day a couple of years ago in the COVID pandemic. Suddenly everything was on subscription, and it was, people really loved it. But I think there is starting to get a little bit more, like you say, a desire for personalization and tailored experiences. And subscriptions sometimes just aren't really serving consumers anymore. And I think that's a really interesting place to be. And I think realistically, I think it has to be a case of you have to have more flexibility in your subscription, I think. And that doesn't necessarily have to come at the detriment of, the provider of the business. But I think as a customer, you want to be able to do a lot of different things. Like you say, change your payment date if you need to, change the card if you need to, or change the bank account, the direct debit, or anything like that. And I think I actually had a instance with my gym subscription, and I was honestly almost like blown away with how good it was. So I was going just looking through my account, and you could actually, all through the app that my gym has, you can cancel your subscription, which obviously is a given, but you can also change the payment date. You can pause your subscription for like up to a month at a time for free, but then after, I think you get like 3 free months to pause your subscription. Then after that, it's like $6.99 to pause your subscription, which I was like, what a genius idea. Like, because people will pay that, and then that's still $6.99 that they're getting for nothing. And I think that I was really quite pleased with that situation. So me as a consumer, obviously, I'm very happy with the situation with that subscription, and so I'm going to keep it going forever. And I'll probably happily pay $6.99 to keep my gym subscription frozen. And then it's just those little things that I think add up to make a great experience for consumers. And I think that's where a lot of people forget now, that it's all about the experience now, and it's all about making sure that customers stay with you, because if they don't want to for whatever reason, they will go because someone else will take them, someone else will take their custom. There's just so much competition out there. You need to keep your customers loyal. And I think, gone are the days where subscriptions, they're still around, so the subscriptions that make it impossible to cancel, that you have to phone a specific number and try and get through to a specific department just to cancel your subscription. They're still around, but I think those are the types that are going to see a lot more reduction in use, because people don't like that. People just want ease and convenience. They want to hit a button and to be gone. So I think that is going to really make such a big difference when we think about subscription businesses moving forward and that kind of modeling. I think it's all about flexible subscription plans and keeping that as it goes. And I think ultimately that is going to help bring down that involuntary churn at the end of the day. If you just keep it flexible and keep your consumers in mind, that is going to be the key.
I think that's especially the point. I know that there are a few services that when you try to cancel, they'll give you like a really good deal. and then you think, well, actually, I wouldn't mind using this. Like kind of like you said there with the gym, in the sense that, you know, even if you want to freeze it for a bit, they're still saying like, look, instead of having to completely cancel and pay the sign up fee, you can have it free for a while, and then it will only be a little bit cheaper. But I've also had experiences with my gym, to be fair, when I was at my old house and having to move house in a different area. I was trying to cancel that membership, and it was the most complicated thing. It just wouldn't cancel. I was you'd end up in a loop, basically. It'd say click this link to get advice, and then you get the advice, and it'd be click this link to cancel, and then you'd just go back and forth, and I ended up having to call my bank to completely just cancel the payment. And then it turns out that is the way that you're meant to do it. But it just makes it so complicated. The fact there isn't just a button that says, you know, pause or cancel or anything like that, it really is annoying. And I think in order to sort of, on topic, like you said, to stop involuntary churn, I think it really is just a thing about flexible payments. And that is really where I think fintechs can sort of step in, because, you know, that's the whole point of fintechs, is to disrupt the status quo and the way things have always been. And traditional subscriptions have always been, you pay on a certain date, you can't change that date, it's the day that you sign up. And I think if fintechs can really step in and sort of specifically paytechs, because I mean, we always write about them and how many there really are, there's definitely a gap in the market, I think, for flexible subscription payments. And I think as soon as we see one organization, like a big name, do it, I think it will be a domino effect, and we'll see the rest of them follow suit. But yeah, it will be definitely one to watch, and an interesting space for sure. So why don't we go to your article, Polly, to round it out?
Absolutely. So sticking with payments, my article today is all about Zambian fintech Union 54, who have announced the official launch of ChitChat, its messaging app with an integrated payment wallet. So they have partnered with Paymentology to be able to introduce a USD virtual MasterCard debit card to the platform. And I thought this was a really interesting one. But first, I mean, a little bit of background. So obviously, ChitChat has been Union 54 has been within the African fintech sector, founded in 2021. And ChitChat is its flagship product that enables users to communicate, network, and transfer money between wallets. So it can convert USD to local currencies and sends in-app funds to other ChitChat users. So obviously, with the help of Paymentology, they will now be able to conduct in-person and online transactions using their ChitChat virtual MasterCard debit card. And I thought this was a really interesting one to talk about for a couple of reasons. Obviously, I think the African fintech market is just being so innovative right now, and I think it's really exciting to see new scenarios. Not scenarios. I think it's really exciting to see new solutions coming into the market, especially ones that are for, you know, serving underbanked consumers, or like boosting the digital economy, helping with financial inclusion, that kind of thing. So I think it's really interesting to see this sort of solution enter the market, one that is all about communication and money transferring. So that's kind of like one element of it, I guess, is terms of like, what do you guys think about the African market and where we are at the moment and the exciting things that are kind of coming out of it? And I guess whether can other emerging markets learn from Africa and kind of the really massive digital growth that they're seeing at the moment. And then also, as like a bit of an aside to that, I thought it'd be really interesting to talk about, I guess, super apps, for want of a better word. So I don't think ChitChat is trying to become a super app, but this idea of all-in-one apps is still becoming super popular, right? Like being able to have an app that you can communicate with and transfer money with. It's kind of, you know, it's giving like WeChat and things over in Asia. It's all very evoking of trying to create a super app. And I think that's really interesting to me, because having an app where you can like speak to your friends and family and also send them money is not something that I would necessarily think is needed. Maybe I could be wrong. Maybe I'm just not the kind of, the consumer for this product. But I think it's really interesting that we're seeing more and more of these kind of solutions coming into the fintech world, where it's not just about one thing anymore. It's about trying to provide different services, I guess, to get people in to using the app for a lot of different things. But maybe, communication and money transferring does go hand in hand. So I'd be really interested to know what you guys think about this whole thing. I feel like I've just like completely word vomited at you about this, but it's just a really interesting thing for me, especially considering how digital Africa is being right now, especially with its digital payments growth. It is just completely booming. And so to have a launch of a product like this is just really exciting. So, I mean, Tom, I'll go to you first. Can you unpick anything that I've just said? I'm getting far too overexcited. But what do you think about the African fintech market, and what do you think about having super apps?
I'll give it a good go to unpick it. You've given us a lot there to work with at least, so pretty happy about that. But I think we've spoken about it before in the sense of certainly the African market is pretty unique compared to any other regions in the world. We've seen quite I don't know how to word it. Like, for example, when I went to Morocco last year, there was a lot of talk about how it had this great opportunity, not only in Morocco, but across Africa, where they don't have this legacy banking technology that does exist in the UK or just the Western world in general. We're talking about Europe or the Americas. They don't have that legacy technology to contend with. And I think that's something that is hugely significant, because it means that these kind of digital solutions where, the likes of certainly Asia and Africa, they're so driven by connectivity via mobile devices. I think one of the stats in the article was 78.7% of the Zambian population, which is equivalent to 16.4 million people, are connected via mobiles. And it just means that these types of solutions are absolutely perfect for the kind of situation that they have here. And because we have this legacy kind of banking technology in the likes of the Western world, it means that these solutions aren't necessarily going to be as easy to implement, and they probably won't be quite as popular because we're not in the same situation where everything we do is driven by mobile technology. But we are kind of transitioning towards that way. But I think certainly it's obvious to see why the likes of Africa are really striving to bolster these kinds of solutions. And yeah, I think kind of delving a little bit into the aspect of super apps, it does make a lot of sense. Obviously, it's been taken off hugely in Asia, and it makes sense that kind of model would apply to the African market as well, regardless of where you are in Africa, because of their sort of digital connectivity and yet lack of the same kind of banking infrastructure that you have elsewhere. I think it does make a lot of sense, and it is clear to see why that market is growing so rapidly. And yeah, I think certainly for Africa, it just makes a lot of sense for this kind of solution to really thrive. And I'm sure we'll see more of it in the coming future. And I'm sure in a few years' time, we might even see a case of, so I'm losing my voice now, like seeing a case of Africa really evolving and growing in the financial world so quickly that it might even be able to catch up to the sort of dominant powers that are currently in the world, but with completely different solutions and a completely different sort of structured market. So it's an exciting time, and hopefully that these kind of solutions can continue to come for Africa and really just bolster its growth.
Yeah, no, I think you've absolutely hit everything there. You've unpicked everything that I was trying to get at. So well done you for deciphering what I was trying to say. But I think you're absolutely right. And I think there's just so much coming out of the African fintech world at the moment. It's a really exciting time, I think, to be sort of having a look at the space and seeing what innovative solutions are coming out of it, because I feel like they're really taking on board a lot of what their consumers actually need. And it's a great example of fintech looking at what solutions can fill the gaps in the market to help, everyday people there. But I mean, Francis, what do you think about all this? What's your take on it?
Yeah, so on the topic of super apps, I feel like, especially in like from our standpoint, in perhaps like from a developed market standpoint, I feel like when you meet someone new, that's where a super app could be really useful, because if everyone has this same platform, I feel like it's really annoying having to get somebody's details to then want to send them money. I feel like that is always just a bit of a hassle, whereas if everyone has this same unified platform, it becomes very simple and very accessible and easy. But specifically looking at this new launch from the new partnership, I should say, from Union 54 and ChitChat, an easily accessible payments platform like ChitChat could be massively beneficial for a developing economy, because like taking Zambia, for example, there's been huge digital adoption, as is mentioned in the article. In fact, researchers found that 78.7% of the population are connected via mobiles. And so there's been an estimation that for the digital payment sector to reach 8.441 million by 2027. And that's really impressive. And I think if there's an easily accessible payments platform that everyone is using and that everyone can communicate with as well, I think it would just make it very, very easy and accessible for not only just Zambians, because I know that they're looking to roll it out across the continent, but I think it will be very, beneficial for those that have previously been restricted with financial services. So yeah, all in all, I think it's a really good service and platform, and it will be interesting to see how it does.
Amazing stuff. Well, yeah, I think you're absolutely right, and I'm really excited to see how everything goes moving forward in this space. But anyway, that does bring us to the end of our discussion today. If you want to hear any more about the fintech world or anything else we've talked about, head on over to fintechtimes.com, where there's plenty of news and insights over there. But very quickly, let's do what I learned this week. So each week we learn so much new news and information being on the Fintech Times editorial team. So much crosses our desks that we are learning something new every single day. So we thought it would be fun to share that with our listeners. So Tom, what have you learned this week?
So this week I learned that return on investment is the number one determining factor for Americans when choosing a savings product, which is according to a new report from Plinkett.
Fantastic stuff. And Francis, what have you learned this week?
So this week I learned about the Saudi Arabian fintech Bark, and that it has achieved a significant milestone in listing 1.6 million wallet users in its first month after launch, and that's mirroring the success of Pix and UPI in Brazil and India respectively. And that is very, very impressive considering it is just an app on the market and not government supported.
Fantastic stuff. And what I learned this week is that when it comes to cybersecurity, the right tools can significantly help reduce risks. So cloud-based collaboration environments, for example, can hugely reduce the amount of data and number of documents an individual needs to keep their local hardware, which reduces the overall risk of data loss, which I thought was really interesting. But anyway, thank you so much, guys, for joining me today and speaking about fintech. It has been a pleasure, as always, to discuss the industry and its news with you. But for now, I will catch you on the next one.
See you guys next week.
See you guys then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.